Good morning, everyone. This is Daily Trading Analysis with the weekend recap for the week of September 4th, the first week of September, in which we are in a it's not a good shape for the overall markets. We were chopping around in all the markets, the Nasdaq, the S&Ps, financials. Dollar was pushing up, yields were pushing up, and fundamental data came a little bit worse than expected. And basically, the fundamental the economic data that came really bad as not as expected was on Wednesday, the ISF services PMI. I think everyone was waiting the services, the sticky part of the inflation. We got 54, and the consensus was to really be on the lower side of the 52s, perhaps going even lower. And this was really bad for the markets. This caused a lot of bad sentiment because services is really important for the Fed, and also for the services employment. It's still going up 54, and the previous one was 50. So still super bearish on the week with this data. And also global services PMI came a little bit still above 50, so still expanding, but basically everyone was expecting the services PMI to came way cooler. A lot of Feds were talking, Fed Logan, Fed Williams, Bostic, and Bowman, saying that there's been progress, but this kind of data, it's not trending, it's not as expected, and we might see still higher yields for longer. There's still that possibility, and at some point, we got in the FedWatch tool, we got November and December at this 550, 575. We ended the week with still flat, but at some point we saw a big push towards another hike in November and December. So we are still pricing in no more hikes. But what is true is that until May 2024, we are not expecting the first interest rate cut. And let me tell you, this is going to be super painful to be at these levels for way longer than expected. Markets, households, economy, businesses are going to really feel the pain. And I think that's all for the fundamentals. Initial jobless claims came also lower than expected, 216. We were expecting a little bit more. And also for the non-farm productivity, it was still way higher. So the rhetoric, the message of the labor market, it's still hot, it's still there. So a lot of things to really worry about the sticky inflation. We have to still wait for this week in terms of, next week. Next week is going to be really huge with the CPI on Wednesday and with the PPI on Thursday. So be prepared, because this is going to be huge next week. Next week, we are going to see if inflation is really going down, or if, as some people is already saying, inflation is still there. And part of the reason is because the labor market is still tight, prices are still going up, and also energy. We are going to talk about that. So for CPI, we are expecting a little bit of the same for the core, but the month over month, the expectation is going to be higher in both month over month and year over year. The only reason to be really expecting a little bit of bullishness on the market, it's core inflation year over year. Perhaps we are seeing a little bit of breathing. We don't see that. But what is true is that next week is going to be really interesting. Still, probabilities are still there, but where I was watching some hours on Wednesday being pushed to another hike on November and December. So that's for the basically the fundamentals. We are going to now review as always, from top to bottom. We are going to stack to start with the Nasdaq. Nasdaq on the weekly put a red candle. It's still an inner candle based on the previous week. We saw a lot of selling pressure, to be honest, a lot of pushing to the downside, and on the weekly we are starting to see this kind of wedging, this kind of compression that perhaps we are at some point going to be higher depending on data or lower. And I think it's going to be really key to see this compression that is starting to see on the weekly. In terms of pivots, we are still waiting at this level. We closed lower, but still in the middle of the previous week's candle. So a lot of holding, a lot of sneaky buying that I saw. And on the daily, we can see that more clearly. We started the week on with this really bad candle, and then we moved towards the center of this huge push, and we are right in the middle of this range. So at this range, with this last candle of dodgy candle with a push like this, I mean, it's not really clear that markets want to pull back directly or even go way lower and to these pivots. So it's not really clear that the sentiment is all that bad. But this next week is going to be really key with CPI and PPI to really see in the midterm where the markets are really going. If we got some bad data, I think this pivot is going to be really key. If we have decent data, this pivot is going to be really key. So the compression that I am talking about in the weekly, it's also appearing on the daily with a descending trend line from the mid-July, sorry. So be really careful, because right now we are in the middle of the range. Nothing is clear. We are still waiting for the CPI and PPI. And on the 30-minute chart, we are starting to see some kind of trend that might look like a bear flag. So we were pulling back on a clear downtrend. Now we are seeing a little bit of push, but look at this price action on the 30-minute chart. This is really bad. I mean, it's not clear the kind of volatility that we got, the kind of manipulation going up and down, taking premium. Options were not clear also. So a lot of activity and price action, but we didn't move that much. And we are still not clear from the perspective of this pivot. We are not clear for sure. And on the first kind of close at 15,200, we are still trying to bounce in between these. So I am aware of this bear flag, the possibility of a bear flag, and this level 15,200 is going to be key, because data will suggest that if we have bad CPI and PPI, I mean, these levels is going to be really destroyed. And for the upside, 15,400 still remain from the first push bounce and then the gap down that we got the week. So really interesting 30-minute chart. On the 5-minute chart on Friday, I was watching for this huge compression that we got. We started going up directly, and look at these moves. Let me focus a little bit. So we have this context of the triangle, the compression, but look at these moves. This is a huge move down, followed up by a huge move out, huge move down, grinding higher, and then push down, and then push up, and then push down again, push up again, push down again. I mean, this is crazy price action, and we didn't move. We didn't move yet, because if we take the Friday's close and settlement, And from the previous day, as you can see, the settlement, the price course was down here, and we basically closed at this level. So the doji was really clear, a lot of price action above, a lot of volume below, really choppy price action. We broke this compression to the downside. I think it was really clear. But then at the end of the day, this move, as always, really coming out of nowhere. So a lot of manipulation on the week. And this is the best example of the week on Friday. Just playing around, algorithms playing around, big money playing around, just to be nowhere in terms of range, closing up in the middle of the range. So they were just playing around with volume and with price action. So don't be caught in these kind of moves, because there's just volatility, there's no money to be made in this range. We have to really wait for big moves in a clear direction. And this is going to happen on Wednesday and Thursday with CPI and PPI. So now that we review that on the daily, we have a little bit compression, bear flag on the 30-minute chart, and we are just in the middle of the range. Let's going to talk about how they perform in terms of the big tech. The Apple, basically we got this gap down. Remember that Apple got crashed on this day and the following day due to China banning the iPhones for government and other agencies. So the first day, Apple lost 4%, the following day, 3%, and the last day, 0.35%. So Apple got a really nice move to the downside, but it dragged down the entire market with the news. We got a partial gap fill from this day, and Apple is just really dangerous. It can do whatever in terms of potential move. It's Apple. You just don't short the biggest tech company in the world, the biggest stock. You just don't short it right away. You have to wait for this kind of move, and then we found buyers. So it's not that clear that Apple is seeing a lot of weakness. Morgan Stanley was saying all around the media that the news of China banning iPhones were overdone, were a little bit extreme, so it's not that bad, basically. So Apple is just a question mark of where are we going next. So it's not clear. So we have to still going through to see if the rest of the big tech has some kind of potential. Microsoft was pushing higher, but we have still to clear really this level of the Nvidia day. We have this level up here at 342, and we're just in the middle of nowhere. In the middle of nowhere, just maybe retaking, bouncing, and taking 330. It's good, but it's just in the middle of the range. It's waiting. Tesla, same thing. The most important thing is just it's trending. It's following this descending trend line, and it's closing the week pretty bad with this topping tail. Tesla has news, some good, some bad, but basically at least we are holding. As you can see, this is quite clear. It's quite clear triangle. After this ascending triangle, we are just on a symmetric triangle. So there might be a move there, or we just go down. The key is 240. Amazon, really strong on the week. Remember that we have this huge ascending that we bounce off, and then we have also this compression from the top on August 2022, and really big 2 days on Thursday and Friday. So Amazon is really interesting. Google also really pushing, really interesting. Also on the Nvidia day, we reclaim higher, we bounce off this level, and we are ready to take 138 towards the April 2022 gap at 141. So Amazon and Google really strong. Nvidia is just, I mean, with this little gap that we filled on this day, on Friday, and with a topping tail, I mean, I think this is just a clear bear flag to the downside towards towards this gap. It's not, this was the moment in which I think Nvidia got denied of 500. And with that rejection, I think Nvidia is just weakness towards this gap down here. And finally, Meta, two upgrades from two banks to Meta couldn't push higher. And this is the first sign of weakness. The second sign of weakness on a really, let's go to the 1 minute chart, because it was insane the amount of selling that we got on Thursday. Look at this move. This was unbelievably from 306 to 292. It was almost 5% down move, followed by a bounce the same day of 3%. And then on the next day, we tried to go higher again and we got rejected again. So be really careful on Meta, because I think there's a lot of speculation. I don't think Meta is really strong, because these two candles on the break of 300 and right now at 297 below 300, this is not good. I mean, this is not what you want to expect with if the potential for really going towards 328 for all-time highs, it's there. I don't think Meta it's there yet. It's not there. So now that we have the Nasdaq, we have all the big tech companies. Let's go to two sector funds that I think we need to have on the table and following up every single day, because financials, it's in the middle of the range at this level. But we got three really holding days, but XLF is really important, because we don't want financials to affect to the downside, because S&Ps will suffer, and also the Nasdaq is not part of financials, but the Nasdaq will suffer also of sentiment. So financials are in the middle. It's not bad, it's not good, but we really need to see progress to the upside towards 35 to really see a strong market. And the other sector that I would like to check is, and to show you, it's energy. This peak is January 2023 peak, and after the bounce down here, we are just skyrocketing towards that level. In terms of percentage, we got a big 22% on energy. And this is really bad for inflation, as you know. If we check the crude oil contract, look at this huge. I've been reviewing this week. You can check the videos on crude oil, because this is the elephant on the room. We got the push higher towards 84, a nice pullback, beautiful pullback of the golden pocket, 61.8 fib retracement, and then a move higher. And this is not your typical move. This is 1, 2, 3, 4, 5, 6, 7, 8, 9 big days to the upside, in which in 9 days we pushed the crude oil 14% to the upside. It's really dangerous. I don't see anyone talking about this, and this is going to destroy the CPI expectations for the upcoming months. Be really careful with your expectations, because even though we are seeing progress to the downside in some fundamental data, energy is going to appear as a monster in the CPI. So really dangerous move to the upside. This is caused because Russia and Saudi Arabia are manipulating the market, are cutting artificially production in order to push prices higher. And it is what it is. And they already said that they are going to do that through 2024. So this is not going to stop anytime soon. And if we check the continuous contract, I mean, this level of 94, it's on the table, I think, and the next one is the big 100. So if this happens, oh boy, be prepared, because the markets are going to really feel the pain because inflation. So financials, we have hope for that, and energy. We need to stop. We need to see a pullback on this. We need to see this sector to be stopped somehow. Next thing that you want to see in order for markets to continue move higher, this is what I was expecting. It's already coming, guys. It's already coming. The dollar is really quite strong. The stronger the US economy, the stronger the dollar, and dollar is affecting the stock market to the downside. So this move on the dollar 1, 2, 3, 4, 5, 6 days, and the last day with this bottoming tail. Wow, this bottoming tail in this zone, I mean, dollar is being bought up, and it was at some point, I think right here on Friday, this was really, really beautiful to see. This was pushing the markets up. But then something happened. And then we are seeing again a strong dollar on the daily. So as I was saying, stronger economy, we all want that, but that shows strong dollar towards other currencies. So a strong dollar affects the stock market downside. So have that clear, and I think we are going to see more from the dollar, and that's why I think if CPI and PPI, and think about the energy, if we see CPI and PPI higher than expected, markets are going to really feel the pain. So be prepared for that. 105, 106 for the dollar, it's really on the table. Yields are continuing higher. It's quite clear. The 2-year yield, it's at 5.1995, still at 5%. And the 10-year, the stronger the economy, the stronger the 10-year yield, and it's still higher. Look at this trend. This is huge. 4.3. So we are still there. We are still there. There are some contracts on the interest rates futures that are showing still a push. CQH, it's March. This is March next year. We are still there at 5.4. And for the May, the one that we want on the FedWatch tool to start cutting rates, it's not cutting rates. So we are still there. We are still seeing higher yields, high dollar, and the markets, it's somehow trying to go higher. And there's no way. This is wrong. So either stock market is just perma-bullying, or someone is sneaky buying for the long term on the dollar and the yields. And to be honest, my opinion is that stock markets is not willing to go down. And when we really see the final nail to the coffin, we are going to really see a big push to the downside. I don't think the stock market is going up with these fundamentals and with the rest of the markets doing what are they doing? Dollar yields going up, metals are not strong. You can see this is gold, it's not strong. Gold want higher, lower interest rates. Copper, look at copper. This is the sign of the worldwide economy. Worldwide economy is sick. Copper is called Dr. Copper because it's used in a lot of points in the supply chain. And look at these 3 days. Look at these 3 days. Silver, look at this week. I mean, worldwide economy is not in a good shape. It's sick. And metals are showing you that. How are we supposed to push the stock market up if earnings are going to be affected, if forward PE ratios are going to be affected? We really need to see the markets going down. due to fundamentals, due to other markets having divergences, and due to the worldwide economy feeling the pain with low demand from China, higher energy prices. It's quite clear the context in which we are right now. So I think we cover everything. Last thing is, as always, small caps. Small caps are suffering the same as the rest of the markets, but they are really suffering. It's not the Nasdaq or the S&Ps that are being bought up somehow, but the Russell, it's just 1, 2, 3, 4 days in a row with pain. And Bitcoin, oh boy, Bitcoin, after this huge sell-off, it tried to go higher and it got really rejected. In my opinion, Bitcoin is just at the edge of the destroy, of the demolition. This is not a good edge below 25,000. It's just there's a huge potential to the downside until we reach 20,000. So basically, this gap is really dangerous. If you are trading Bitcoin, be really careful with this pocket, because I think Bitcoin is no longer used as a refugee for currencies, and it's just being let alone. And let alone Bitcoin, crypto is really dangerous in this context with this sentiment. Be really careful. So I think that's all from my side. I think we cover everything from the fundamentals to the technical analysis from top to bottom, weekly, daily, lower time frames, other markets. Two things to remember. Crude oil, it's skyrocketing. This is going to affect next reading for CPI and PPI, inflation, and the dollar is still quite strong. Watch dollar. If it continues higher, prepare for a move down on the stock market. Thank you all for your time. As always, if you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day in the week, and on the weekend I cover this weekend recap in which we go through the fundamental analysis, the technical analysis, and all you need to know for be prepared for next week. Remember that discipline and risk management are key for your success. Stay safe everyone, enjoy the weekend, and see you on Monday.